Let's start off the show by giving you a glimpse as to the star lineup that we have over the next half hour. Joining in on the show with their expert market views is Ajay Srivastava, CEO, Dimensions Consulting. We've got Sandeep Wagle, founder and managing director at Aptar Technical Advisory Services. And Nipun Mehta, founder and CEO at Blue Ocean Capital Advisors, will also be with us on the show.
Indian markets have moved against global cues, and we've really managed to buck the trend in last 3-4 trading sessions. That just tells you that markets secretly or are clearly pricing in a strong election verdict. There is a general opinion in the market that BJP will get 3 out of 4 states this time around. The way Nifty is positioned is that we are once again approaching that important crucial mark of 60 to 50, 6300, the hump which has bothered us in the past. So this week, since we don't have any global cues, flows are looking okay, rupee is looking stable, US Treasury, US 10-year paper has done nothing, the dollar index has also come down. This week we could trade with a positive bias. But next week we are in for a big swing day. Monday morning markets will react to the election verdict and we really could be a big swing day. So if the verdict is favorable, Nifty will go to 6300, we could make a new high. But if the election is against what markets are betting on, then 6200 or even 6300 will act as a high watermark really for a long time. So 2-3 days I think the party is going to be on, but next week is the litmus test.
Absolutely, and I think the political arena is going to determine the way the markets at least pan out. So Nipun, let's get in your view. Clearly that outcome is going to have a big bearing on the markets. What's your sense as to the kind of rally that we can see?
Well, I think, yes, clearly, a lot would depend on the elections. You've got all the key parameters that were there in terms of earnings, GDP, which was there sometime last week. A lot of the important parameters, at least domestic ones, which are more or less been announced. So the eyes would be on the elections in the short term. Obviously, the RBI policy, RBI announcement later in the month, which are going to be key. If and there are certain results that the market is factoring in. If the results probably are better than this, you could see a rally which could further get extended and take it up by another at least 3 to 4%. If the results show up a bit of a fractional mandate or where you have a lesser majority than what the market perceives, you're probably going to have a 3 to 4% fall as far as the market is concerned. But yes, I think what's critical is this time around, at least in the last 2 or 3 trading sessions, you've seen a broader rally. There are certain sectors like capital goods or certain stocks in capital goods which seem to have appreciated more than what their earnings deserve or more than what overall the industry has grown. There are uncertainties coming in the form of the auto dispatches being lower. Cement prices are probably going up. So you're seeing another sector which could show improved results maybe for the December quarter.
Right.
So there's a mix that is there, and clearly, at least for the short term, the election is what will be watched.
Yes, capital goods, surely they have regained momentum. It looked like a bout of short covering, then it looked like a strong swell, but now the way capital goods stocks have appreciated in last 8-10 days, clearly they have rediscovered momentum. Sandeep Wagle, before I talk about individual capital goods stocks and what's going on there, Nifty is back above 6200. We failed to cross this mark not once, not twice, but about 4 times this year. Do you think this time around it could be different?
Absolutely, Nikunj. Look at the other side. We have not broken 59.50, 59.60 so many times. I think 3 or 4 times we went down, but we have bounced back sharply. So I would say that we are in a range, and the moment we get some trigger, now whether that trigger is a week away or a month away, that is a little difficult to say. But the monthly pattern is extremely positive, and I have no doubt that the prior high of 63.50, 60 will be crossed, and we'll go towards 64.50, 6500 also is possible. Now that may happen in the next 2 to 3 months, because the monthly chart validity is for the next 3 to 6 months. We may struggle for the next 1 or 2 weeks or possibly even a month. But in the next 2 to 3 to 4 months, I think we should be somewhere near 64.50 to 6500.
Ajay, what's your view? Because things are looking strong to everyone on the street. The view is that the economy has seen some kind of a bottom. The problem here is that we could turn, but we could end up, but we're nowhere close to the upturn as of now.
Well, I think, we have a right to be optimists sometimes, at least in the last 3 years. And I think we need to look at something positive happening in the economy. Having said that, I think everything is looking good, but I don't know what's going to happen, because if you look at the fiscal deficit, 84% of the budget, Finance Minister wants to be within the budget. No possible, plausible, mathematical way it can be within 4.8%. So I don't know what's going to be the impact of the government spending going down so drastically to be within 4.8% of GDP. I don't think we have factored it enough. That's one. Number two, let's not read, we are looking good as far as we are concerned, but let us not go too deep into the territory to say it's all good, because the same institutions which are giving out strong buy notices are also sitting with huge amount of stocks bought at really high prices, which they have been trying to get them up to the point, and case in point like Jayaprakash, etc. So you got to take it with a little bit of pinch of salt, because they're not disclosing the fact that what we normally disclose is that what is the position they're carrying, what are the average prices they're carrying, what is the background to these calls that they keep coming out with, and it's not the first time. It's happened in the last 18 months. So an average investor needs to be a little wary of these calls to say, do these calls make enough sense for us to jump into at these prices in the stock market? Things could look better, but so does the stock market prices. L&T is now back at 1,050 plus. JP is at 55 plus compared to 28. So yes, things are looking better, but the valuation also have gone stretch, and let's not read too much into the calls of the FIs, because those are the fellows who are stuck with quite a bit of the mid-caps and stocks at outrageous prices, and they need to find exits to it. So things are good, but not as hunky-dory, because with the fiscal deficit where it is, things are going to turn nasty, at least in the Jan to March quarter.
HCL Technologies today really rediscovered momentum. That was one of the biggest gainer on the Nifty, and that has to be the stock of the day. 46 rupees of HCL Technologies. So far this year, HCL Tech has been the best performing stock. Now, ID stocks, they lost some way after the numbers, but I guess markets are convinced that for the moment, it's all about predictability and business visibility, and large cap IT stocks, honestly, are promising a lot of predictability and a lot of visibility. Ajay, time to really revisit IT as a group, because that is the only group which is offering predictability and visibility, and that is coming at a decent price.
Absolutely correct. This is a must-have in the portfolio, and you can pick and choose, because literally the top 5 companies are all competing for excellence, and therefore there is this must be part of the portfolio, because all the industries will go through a cycle. A lot of people made good money in IT, have gone out of it, now it's slugging around. Tech Mahindra is about 1680, Infosys about 3300, and so on and so forth. So I think it's appropriate time to start nibbling this, building it up. But we must understand one thing, that it's going to give a while before the returns come back to this industry. I think it's going to be about 3 to 4 months before we see a double-digit return in terms of share price coming to this industry. It has to be the next quarter result. When that happens, then the industry will get again re-rated, and we'll see the good performance coming through. Plus, important point is that some of the hedges will be coming off now, so they will be seeing a benefit of the exchange rates coming into the system. Therefore, a question you asked is, yes, it's a must-have in the portfolio. Should you start nibbling at it? Answer is yes. Should you put all your money right now? Perhaps answer is no. I would still say spread it out over the next couple of weeks, because there will be time to buy these stocks.
Sandeep, what is it that you make of the momentum in Ranbaxy, Sun Pharma, Lupin, even some of the other smaller names like a Strides which rallied?
Well, most of them look good, Aman, but I would single out a Ranbaxy in terms of the price pattern as well as the volumes. And I have a very clear target of around 470 to 475. So at a level of 445, 450, that range, or maybe down to 440. I don't see it go much below that. I would be a buyer, and I would talk of a very clear 5 to 7% trading upside. And who knows, we may be surprised with a move beyond that, and the move can extend beyond 500 as well. Now, this is a view for the next few weeks, not for the next few days.
Nipun, would you jump in to buy pharma stocks, with the exception of, let's say, Ranbaxy, Cipla or Wockhardt? The run-up in pharma in general has been quite quite a strong one, and large cap pharma stocks are no longer cheap now.
Sure, but Nikunj, there is clearly an opportunity that one sees as far as the mid-cap pharma stocks are concerned. You've seen a turnaround as far as several of the companies is concerned, given the kind of either the generics business or the ANDAs that they've filed. They seem to be having lesser problems with the FDA in comparison to some of the larger ones that we've really seen. And the valuations have been clearly different in comparison to some of the large cap ones, which some of them have been fairly stretched and which have to some extent outperformed the market. So yes, opportunity still exists as far as pharma is concerned. You've seen the Aurobindo Pharmas and some of the others which actually have shown a significant uptick. And in that space, one continues to keep an eye on the mid-cap pharma stocks.
Ajay, what about you? Because from the metals basket, you've seen a strong show from quite a few stocks. What is it that you like from this basket? Are you convinced by the up move we've seen?
Go right ahead with Tata Steel. I think that's the only stock. And the reason I don't like SLST is because I think in Vedanta Group, shareholders never make money at the end of the day. If you look at the past 10 years of history of this group, the transaction that they have done, the shareholders always lost money. So that's why we don't believe that irrespective of the fundamental, you go and invest in SSLT, rather go invest in Tata Steel, I think, which will give you a safer and a better return.
Sandeep, how should one read into today's price action in private banks? Axis Bank and ICICI Bank, historically they always map each other, and today the price action both in Axis Bank and ICICI Bank was no different.
I would choose an Axis Bank between the two, though ICICI also did move in the initial part of the day, but I was expecting a bigger move which did not happen. Axis Bank has clearly closed at the highest point in the day of the day. And I see a clear upside, current close of 1190. I would talk of a trading upside of 1230, 1240. So for me, I think Axis Bank will be the stock in the banking space.
Sandeep, I'll throw three more stocks at you, stocks which are at a 52-week high. Aurobindo Pharma, Arvind and Tata Communication. So out of the three stocks, Sandeep Agle, which I just mentioned, tick mark the strongest one.
Aurobindo Pharma followed by Arvind. And then a Tata Communication.
Come on, out of three, you've given me three names. You have to tick mark one.
So I gave you the order. Aurobindo Pharma would be my first bet. But please understand that this stock has moved quite a bit. So the trend is up, but then you can always have a correction of a 4-5%. That can't be ruled out.
Nipun, what did you make of some of the names from the overall auto basket? Because it's clearly been challenging for the overall auto sector for the month of November.
Sure. I think what we saw probably, it's now proving out that what we saw sometime in September and October was probably a bit of festive season, a bit of the fact that sales had dipped significantly when you look at somewhere in the middle of the year, June, July, months of June and July, or to some extent even August. And that uptick obviously seemed temporary. One does believe that yes, that the volumes is something that could remain challenged, it could remain volatile. You could just probably see another month of bump up sometime in December and again sometime in March, given either the year-end considerations based on the calendar year or the financial year. But other than that, I think Jan-Febs are likely to show dipped volumes. So really uncertain as far as the entire space is concerned, both two-wheelers as well as four-wheelers, is something that you will see. Margins, of course, clearly under pressure. Given the kind of discounts that are around, but volumes will continue to remain under pressure.
We're identifying some of the key stocks to keep on your radar. We'll start off with what the dealing rooms are advising. Navneet's here with a list. Navneet.
Hi, Avan. Well, the dealers have been suggesting to buy into Ashok Leyland as well as Kedila Healthcare. Well, if you look at Ashok Leyland first, that counter is down by about 37% on YTD basis. But there is some buzz of company selling its non-core assets, which could be worth about 800 crores. So if this materializes, it could provide some kind of fillip to the stock price, on back of which the dealers have suggested to buy into this particular stock. The other is Kedila Healthcare. The stock is also not done well. If you look at the YTD returns, it's about 18%, and in the last 6 to 8 quarters, the financials company has been underperforming on that front. But HDFC Securities, they have come out with a report maintaining their rating of buy, and they're quite bullish on the company's US business. They have said that the 7 to 8% price hike which the company has taken in the US business is likely to be sustained. Also, the company is looking to launch about 2 to 3 new products in the US markets, on back of which they've maintained their rating. But talking about the domestic business, which has been subdued, but the management is pretty much confident of registering about 20% growth for the domestic formulation business for FY15. And well, if you look at the stock, that's trading about 16 times its FY15 EPS.
Right, Navneet, thanks a lot for that. Ajay, let's talk about auto ancillary as a group. Of late, tire stocks have been jumping around. If the monthly sales dispatch numbers are not that impressive, tires are not selling. So, is there logic in buying into tire stocks?
See, tire stocks, if you look at it, it's actually 4 companies by and large. You know, MRF you buy for stability and earnings and growth. You don't worry about it. Apollo, I think, has got hurt by its overseas acquisition. We all knew about that. So you really don't want to touch it till there is clarity. Are they going to buy or not going to buy the Cooper story? If they're not going to buy it, it'll be a straight bump up by at least 30% at the end of the day, straight in. JK sits in the middle zone because it's been a medium class performer. So, you know, tire stories, you don't have too many choices at the end of the day. That's one. Number 2 is, again, it's a derived demand companies. And I am a firm believer, unfortunately, is that I want to go for companies which own the brands and deal with the consumer, because the maximum bang for the buck is where the consumer stories lie. So if you see the PE multiples, you see the EBITDA multiples, book value multiples, all these ancillaries get maybe half or less than half of the main companies. So why would I want to allocate capital? So they may do well. I'm not arguing against the tire companies, but I sincerely believe that given the investor multiples, given the market multiples for these second-tier industries, one would tend not to buy into the stocks and go for the main line. MRF is a good guy. Buy it and keep it for your grandchildren. I think they will feel very safe and secure about it.
And Sandeep, what is it that you would advise on the charts?
I would go with a buy in HCL Tech. I think Nikunj mentioned earlier that is given a good momentum and showing a good traction. I would buy it with a stop loss of 1117 and target of 1167. The second call is a buy in Jindal Steel, stop loss of 263, target of 282.
Nipun, where are you allocating capital? Let's be specific. Give me some names and some names which are not part of the Nifty 50, because I know you like L&T and ICICI Bank.
Well, the pharma space is something which we've been looking at for some time. I think we continue to look at that. We're trying to find winners in that, the mid-cap pharma space particularly. Closely looking at Aurobindo Pharma and the Strides of this world, where you are seeing significant traction. You're seeing, to a degree, some re-rating happening given somewhat of consistent returns that have now come in, the consistent results that have now come in, profitability showing a degree of change. So that's where we're not necessarily still allocating capital, but keeping a close look. We could be starting to allocate capital.
Okay, thanks very much, gentlemen, today for joining in on the show and giving us your expert market opinion.